All right, so as a Forex trader, if you don't know what market structure is, you are currently losing money in the market. But luckily for you, I'm breaking it down real simple and effective so that you can digest all the information really quickly in about 10 minutes. So let's get into it. All right, so first, when it comes to market structure, you need to identify your highs and your lows. We're going to start with a daily chart. So when it comes to your daily, it gives you the overall view of where your target is going to be. So let's look at what price is doing right now. We have this high right here, and then we see a new high was made, right? And as you're making those higher highs, you also have higher lows being created. You see that this low is higher than this low. And it goes on and on like that. So now, to identify this structure, you see clearly we're in an uptrend. So you'll put your trend line right here, showing you that you're gonna be taking majority buys. But based off knowing structure and your highs and your lows, and you see that these highs are being broken, it's showing you that you're forming this uptrend. Let's make this a different color. Up, down, up, down, up, right? Okay, so now you're in an uptrend. So when it comes to trading, it's three things: where to get in, where to get out, and where the market is going. One thing that I use to show me where to get out the market is my Fibonacci. Okay, so my Fibonacci basically shows me where price is going to go, and that's my exit. So we're not going to get into Fibonacci right now, but I just want to show you guys how I do it. So it's from point A to point B, and it pulled back to 61.8 on my fib. So that means that my target that I'm going for is TP2 negative 61.8. And since we're on the daily, clearly I'm not going to get in at these lows, but it's still just showing me overall where price is going. So if I put the replay button and say none of this happened at all, say none of this happened, right? So we're still trying to see where price is going, but I see that we're making this new high and we made a new higher low. So this low is higher, like I said, than this previous low. That shows that we're transitioning into an uptrend. So another confirmation that I know that we're transitioning into an uptrend is by seeing what structure previously did. So if I come right here to the right, let's go on the 4-hour. And let's identify our highs and our lows. So our highs and our lows are those areas that stick out the most, especially on the higher time frame. So you have your high, your low, your high, your low. Even looking left, same thing. Low, high, right? Now, when you add your Fibonacci, and like I said, we're not going to get into Fibonacci on this particular video right here, but I just want to show you guys this is how I see where the market is going to go, where I'm supposed to be getting out. So for example, right here, I know we're in an uptrend because previously structure hit TP2 negative 61.8, and this is on the 4-hour time frame. So anytime we're on a higher time frame and we hit 61.8, that indicates a reversal. So this is the whole structure that I'm looking at right here. Point A, point B, which is 0. Let me make this a different color. So pull back to 61.8 on my fib, which indicates that we're going to go to TP2. Right? So once we get to TP2, like I said, anytime we hit negative 61.8 on the higher time frame, such as the 4-hour and the 1-hour, that indicates a reversal. So a reversal, the change of structure. So now that we were in this downtrend, but now that we hit 61.8, that means we're going into an uptrend. And of course, there's other confluences, but this is part of knowing structure. So once we hit that 61.8, clearly you can see we made that new high, and then we made this new higher low. So this low didn't break this previous low. If this low broke this previous low, then of course we would have still been in sales. But since it went higher than that previous low, we're now transitioning into an uptrend. And as you can see, playing it out, let me add my fib. So my fib right here, it hit 61.8 again, right? Point A, point B, pull back 61.8, and now I'm looking for price overall to go to 61.8. But I also want to point out that inside of these higher time frames, there's more structure in between. So inside of this 4 hour, let me draw out this 4 hour again. So inside of these 4 hour trends, there are 1 hours. And inside of those 1 hours, there's 30-minute structure. This is how you take advantage of day trading as well as swing trading. And if you are a scalper and you know your structure, you can definitely do it on the lower time frames as well. But I just want to show y'all the 4 hour, the 1 hour, and the 30 minutes. So each line that I created, this is based off the 4 hour. Now I just said inside of the 4 hour, there's a 1 hour. So let's go on the 1 hour time frame. So now this is the leg of the 4 hour, right? Why do I have multiple dips? Let's get rid of that. So I won't confuse y'all. So clearly we just said 61.8 on the 4 hour. So now we're going to be looking for a change of structure, but we're not going to get into where price is going and all that. I just want to show y'all structure right now. So inside of that 4 hour, we have that 1 hour, right? So again, we look for the highs, the lows, highs being broken to show that we're continuing in that uptrend, right? First, we're going to identify the lows. All right, so I want y'all who are watching this, point out the low right now. The first low will be right here. So now we're on the 1 hour. Let's make it green. I'm going to delete this so y'all don't get confused. Because I be confused when I see a whole bunch of stuff on my trend line, on my chart. I just be like, whoa. Another hint, something that you can do to make your chart cleaner is you can hide whatever you have on your chart on each time frame. So for example, say I have this trend line and I don't want to see it on the, let's say I'm on the 1 hour and I don't want to see it on the 4 hour. I'll click it, go to settings, visibility, and then change it to whatever time frame I want to see it. So if I don't want to see it on the daily, say I just want to see it on the 1 hour, don't want to see it on the 4 hour, I'll change that to 1. And now when you go on the 4 hour, boom, it's not there. It just disappears. And that just helps with confusion, especially for me. I can't see all this stuff like just clutter on my screen. It drives me insane. Like I just, anyways, that's really just going to clear your brain if that's something that you struggle with. Back to the charts. We're getting off topic. Okay, so the 1 hour, so here's our low right here, right? Because these are areas that stick out, right? Here's your high. So we're still in the uptrend, right? And here's your next low. So literally, let me delete that so we don't get confused as well. Delete that. So this is the whole 1 hour time frame. Now I'm gonna add my fib. Boom. Hit 38.2. So now I know for sure we're going to TP1, negative 27. That's 220 pips. Easy. 6 hours. 6 hours, 220 pips. That's a lot of pips, okay? But I'm just showing y'all structure right now, but I'm just showing y'all the magic of fibs. It's just so magical. But we're going into structure because structure is important, and you can't use fibs if you don't know your structure. Because if I didn't know structure, and I could have probably, instead of doing that, and I didn't know structure, I probably could have put a fib, I don't know, let's say like, let's say I could have done this. Let me delete this in the background. If I didn't know structure, I could have done this, right? So if I didn't know structure, I'll be looking for price to come here, okay, and pull back, and then look for price to go all the way down. Clearly, it didn't do that. But when you know structure, you know the overall movement of price. So clearly, I see these new highs and these lows being created, right? So I have my fib and went to 38.2. Clearly, it pushed past, but that's has nothing to do with what we're talking about right now. So based off this $1, we have point A, point B, drawn to the future. Okay, now inside of this 1 hour, there's a 30 minutes. And I just want to point out too that every time price gets to the top, it has to take a breather. Price isn't always going to just push up. Anytime price push ups, it has to stop, take a breather, and do a little pullback, a little correction. Okay, never get in on like a bullish. If you just see bullish and you don't know like where you are in the market or what it's doing, like just don't hop in if you don't know what's going on, because you're just gonna lose so much money at the back end. So structure, you need to know your structure. Structure is king, okay? Period. Okay, so inside of each 1 hour, there's a 30-minute. So let's look at this little area right here, right? This is a leg, a correction of the 1 hour. So the 1 hour would be a high right there. Where's the low, y'all? Y'all know where the low is. Where's the low? And we're looking at this whole section right here. 30 minutes. The next low will be right here. Remember, it's the areas that stick out. Next high, right there. And then the low. So now that we know the formation, the structure of the 30-minute will be here, 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 right? So now we know where our fib goes. So our fib will go from right here. There we go. So again, point A, point B. Let's make this dark purple. Pull back. And then we're looking for it to go to TP2, but clearly it pushed past to 61.8. Now, 61.8 on the smaller time frames does not mean a reversal of the whole trend, okay? It's just the correction of the pullback of the overall major structure. Because as you can see on the 1 hour, clearly we see it continued in this uptrend right here, right? So the 30-minute, when it hits TP2 on the fib, that doesn't indicate a reversal. It's just the pullback off the overall major structure. But structure, knowing your highs and your lows is definitely key. Now, I would say when you're looking at structure, you need to pay attention to the highs being broken or lows being broken. Because like I pointed out, say with this trend that we were looking at, it was in a downtrend. If price created this high, which is slower than this high, that's still showing we're in the downtrend, right? But the low that was created, it didn't go below this previous low. So it didn't come down here. It went higher up here. So that's showing us that we're shifting, especially since this is like the 4 hour. Okay, so yeah, so pay attention to those higher highs and those lower lows. If you're seeing lower highs being created, so let's just remove all this off. If you see lower highs being created like these, then clearly that's showing you you're in a downtrend, right? But once you see lower highs being created after it was just, So if you see, once you see higher lows are being created after you were just seeing lower lows, that's showing you that it's a shift in the direction of the trend. Okay, so that's something to be aware of, your highs and your lows and which ones are being broken and not, especially on these higher time frames. The higher time frames gives you that target that you're looking for so that you're able to take advantage of those minor moves in between on the lower time frames, because we getting all the money that we can out this market and knowledge is power. So once you know structure and once you continue to practice this, it's kind of hard at first, but I'm telling you, once you get it, you got it. Because with me, structure was a struggle. Like, I was just so confused when I was doing this at first. When I was learning, I was just like, is this right? But as you keep like training your eyes, you're definitely going to get it. All right, y'all. So that's it for market structure. I hope that it was very easy for you guys to digest. More videos coming soon. Make sure to like, comment, and subscribe. And I'll see y'all in the next video.